What is up, guys? Today we are back with another video, and today I'm basically going over my routine on gold and UJ. It's going to be kind of like a multi video, and yeah, so I only trade 6 different assets. 4 of them are forex pairs, and 2 of them are sorry, and 2 of them are futures, so oil and gold. So the first thing that I usually do on gold is when I'm trading gold, I usually go on the 3 minute and the 4 hour time frame. The 4 hour time frame I kind of use for a more directional bias. So I like to zoom in on the 4 hour time frame and just see what's happening. And by seeing what's happening, I mean, like, okay, so we have our current high here. Okay, this isn't our current high. We have a current high here and our current low here. Previous low, previous high before making that low. And these were the 4 pieces of market structure that created that continued to create the trend that we had from above here, which was bearish, obviously, right? All up here, and it continued downward. And so this lets you know that, okay, well, right now, price is bearish, so I'm only looking to sell. And what I did was, or I'm sorry, what I do was, or what I do, I just want to go ahead and click that off. The 4 hour, like I said, for the trend, and I go to the 3 minute. I zoom all the way out on the 3 minute. And then what I kind of do is I look for these imbalance gaps / supply and demand zones. So when I'm selling, I kind of sell high, right? Because you want to sell high to make the most profit off the most movement. And so to determine where exactly you're going to look for your actual trading entry, I basically will take my fib, or again, I have a Gambox tool, and I'll just drag it from top to bottom. So what I mean by top to bottom is I dragged it from the top of market structure right here to the bottom where the other blue circle is right there. And the gold line represents the middle. So 50%. It's like you have a sandwich. 50% of your sandwich, half of it. So the bottom half is for buying, top half for selling, right? So the first thing that I normally do, guys, is I usually wait for I wait for price to come up when I'm selling, which it technically has. It came up. And what it does is once it's done going up, it will just break down and continue to go down. So right here we see that it went up here, it tapped into something up here. You can use multiple time frames to actually see where price came in and tapped into. So right now it's actually possible for gold to come and get into the sell supply zone / gap right there before going down, or gold can just continue going down where it's from right now. And the cool thing about it is what I usually do is I'm actually gonna, since I saw that on the 15 minute, I'm expecting price to come up to here, either that or I'm gonna go on the 3 minute, and then I'm gonna zoom even in more, get rid of this yellow line, and we're gonna go look at price action more clearly. So we see to the left side, price action was bullish, right? It was going up, and what happened? Went up, and once we got to this high point, price came down here and dropped. But not only did it drop and took out one of these structures, it took out this structure, all these little mini highs and lows. So I mean, sorry, all these little mini lows, and that's letting you know that it's taking liquidity and it's going to the downside. And so technically, I don't specifically trade by, like, let's say you saw this, right? I don't wait for price to come and retrace in order to sell to get in. I would wait for price to come up, trace, make a point right there, and then drop, and then I would wait to get in. So meaning, let's say I was waiting for price to disrupt disrupt the previous trend we had on the left side. So let's wait for that disruption like that. Then I would just simply wait for price to come back up again, retrace, then break again, because that means we have 1, 2, 3, 4, and that's the number I usually like to have when I'm looking for a new trend. And so that first initial price action break isn't enough confirmation for me to actually sell. I need it to retrace and then go down. And then once I know then I look for a gap or a supply zone, which could have been here. We zoom in right here if you don't see it. And that's how I draw it. So by gap, I mean the space in between that the wick did not tap into. So the wick did tap into right here. But before, when price ever breaks a new high and low, it's always unhealthy price action. So if the trend is going down, right, the price that breaks that previous low in the downtrend usually creates a dramatic move going straight down before the market comes back up and makes that healthy price action of going down, up, down, up. But sometimes when price is in a hurry because of large supply, large demand, price will just go straight down. And basically, our job as smart money traders, supply and demand traders, is to just get in on these retracements when these drops happen or rises happen to the upside, and that's all we're doing. And so basically, right here in this example, you can see that same pattern: down, up, down, right here, right? Because if we take the arrow out, we had price come up, down, the blue candle coming up, gray candles going down, blue candles going up, gray candles going down. But right here, when we had those gray candles going down, we had all that unhealthy price action as we broke the low. Because here, the gray candles go down every time and break the low, which was this low that was broken by this gray candle, and it left behind this space. So the wick right here, this is the rectangle, this is the candle, right? And so there's a wick right here, and there's another wick right here. There's a space in between those two wicks that did not get filled by any candlestick, letting you know that it is a supply zone slash gap. That's what an imbalance gap is, for value gap. And so when price is in such a rush to the downside or upside, it doesn't have time to balance itself and retrace itself, like right there. And price actually did come back and retrace itself perfectly because we had the wick tap into that, letting you know it's smart money. Because when you're trading like this, a lot of times you want to see the wicks tap into your supply and demand zones rather than the actual candle bodies. Because when you have the bodies in, it's fine, but when you have the wicks, I mean, it's more of a smart money institutional confluence. It's more of a supply and demand confluence than just waiting for the candles. Because usually your trades are going to have a little drawdown when you're trading supply and demand, smart money, fair value gaps, or order blocks in the first place. You're going to have less drawdown, meaning that when price enters your stop loss, price shouldn't be hanging out in your stop loss. Like, let's say this gray box was our entry. Price shouldn't be hanging out in that gray box. You should just go up to that gray box and tap it and then reverse to the downside, continuing the trend that it was already on. But and that's what it did. It tapped in and immediately just went straight down and continued the trend. And so if I was selling right there, I would sell right here in the middle of the box. And then my stop loss is always going to be here. So if it's a wick right there, if the candle is like all wicky, I do it there. And then your take profit is going to be the next low. So here, in this case, would be this liquidity down here. I would have took profit there if I was selling there. And that's what it would have looked like that. So yeah, guys, that's pretty much it. And so I was just going over that little reason of what I would do in that scenario if I was waiting for a reversal. But that's actually a trade I could have took, but I wasn't present around gold. So this is something I actually would have done. And yeah, so I don't think price actually is going to come to that 15-minute now that I think about it, because of how price is doing now. So when I see price, let's say, move to the downside even more, and what I mean by even more is when I see price come down where it's from right now and break this current low like that, breaking this low right here, this previous one, when it breaks that current one, then I'll look for another supply zone similar to the trade that I just showed you guys right there. And I'll look to trade it again on this side. And that's pretty much all I do. I'm waiting for break of structure. You get a break of structure. Structure is what maintains a trend in any market. Whenever a trend is going up, the structure that maintains that uptrend is the highs and lows, and when the same thing likewise going down. And whenever there's a break in structure, or a break of structure, that just means that the trend is being disrupted because the structures that were initially maintaining that uptrend have been broken. And because of that, that's why people are allowed to trade the trend line break strategy and all these other strategies, is because it's based off of just price having a lot of supply and demand. And because of that, it creates a change in the market, because it takes a lot of money to move the market. So when there's excess supply and there's not a lot of demand, then prices are going to drop. People are selling, and that's going to create a disruption of whatever previous short-term bullish trend that there was in the market, guys. So that's pretty much all you're going to have to do, is whenever you're looking for a trade setup and you're looking for a confirmation of when to sell or buy, just wait for a break of structure to let you know that, hey, the sellers are in the market. So if you're selling, breakup structure lets you know that sellers are in the market, like here, right? So when I just showed you this little uptrend and it broke and it went to a downtrend, now the sellers are in the market. So if the sellers are in the market, that just simply means you need to sell, like right there. I sold, or I didn't sell. I didn't actually take this trade, but in this example, this was a sell trade right here that I could have took because the sellers were in the market, and I had confirmation of that. Because we had a high here of this previous bullish trend, and after this high was made, the market came down and broke down all of this right here. And then I wouldn't, like I said, I don't sell after that. I need to see price come up, which it did, and it came down more. And so after that, I could have took profit. Sorry, I could have entered right there at that supply zone, gap, and took profit at that liquidity, which is the next low, which price did smash into the next low, and it literally did that perfectly. But yeah, guys, a tip with gold and trading gold and the time frame of gold is usually the 4 hour is what I do for the trend, like right here, for the my long term trend, and the 3 minute is what I do for my actual like short term trend and entries. So the 3 minute, 5 minute, I'll even use the 15 minute as my short term trend. But yeah, and so that's pretty much what I did, and I kind of hope you guys got value out of this. I'm going to switch to UJ, and I'm going to show you guys UJ and what I got for UJ to see if you guys are interested in that. But yeah, just give me 1 second. Alright, so now we are on UJ, guys. I hope this is... I hope... Sorry, I was trying to try to have that on, but I think it's going to be distracting. I was trying to try to have UJ as my main pair, but then I started getting into other pairs. But this is what I did to base. This is actual trade I actually did take. This trade is on my Discord and on my Instagram. You can check it out if you want. So basically, what I did to get in this trade, let me explain to you guys. When I trade UJ, since UJ is an Asian pair, because of Japanese yen, it moves slower, and because of that fact, I have to trade it starting on a small time frame. So I start on the 5 minute time frame usually, and then I zoom out, and will do my trend like that. And then to validate that 5 minute, to make sure the 5 minute trend isn't reversing, I go on the 1 hour. And that's pretty much what I do for UJ. And so I went on the 5 minute, I zoomed out, and I said, oh, okay, well, obviously we're going up, right? Because the price is going up. And what I was looking at was right here. I was currently right here. Price was going up, and then we had this high that was made. And then I was like, oh, shoot. Well, because that new high that was made broke this previous high right here, that means that the trend is continuing to go up, because this right here, this high, broke this high. It would be different if this high broke down there and went to the downside, letting you know the trend is going to be bearish, right? It's obvious. So, because of it breaking that high, like I said, it has to go straight up. Price went straight. Price always goes straight up when it usually breaks a high, and there's a lot of demand. And there's always a retracement, whether it happens today, next week, tomorrow. There's always a retracement after the market moves. Whenever there's market movement, there is always retracement. Remember that. So yeah, so we had price break a structure right there, and I'll even draw it for you. I actually should have had this written down for you. I'm just so used to doing it, I don't always write it down, but I'm going to write it down so you guys can see that line right there, that black line that I just drew with the labels BOS, represents break of structure. Price breaking this previous blue high right here, and now we have a new high. And so because we have a new high, I saw that and I was like, oh shoot, there's a demand zone right there on the bottom of the range, because I always want to buy low. So there was a demand zone towards the bottom, not right here, not buying right here at the top, waiting for price to go down there. And if you notice, price perfectly touched my entry with that wick. And if you're going to notice this in my Discord too, all my entries have a wick tapping into the actual entry. Price taps in and goes immediately. It's not a fantasy. Smart money is like that. When you're spreading supply and demand, it's really precise and precision-based, institutional type of methodology of trading. And so that zone that it tapped into was actually my demand zone, and this is how I draw it. So the box represents the actual space of the gap / demand itself, and the dotted line that you see right here, I just drew that in for the middle to calculate, okay, if I have my stop loss, which was right here, then this dotted line just says, okay, your stop loss is approaching. So it's basically like a stop loss. It's a risk management system that I have going on, and so yeah, um, this stop loss specifically. Let me write it out for you guys. This stop loss specifically was right here, and we'll actually color it red, and then the take profit was up here, and I'll show you. All right, so sorry guys, this freaking thing is acting up. I'm trying to zoom out. This freaking, why does it do that every time I try to zoom out? Yeah, okay. So the take profit was right here. This order block was my take profit, right? That was basically, that yellow line was initially my take profit. This order block. So what? And this is a good example of why I like looking on the higher time frames, because on higher time frames you see things that you don't see normally on the low time frames, because the high time frames tell you when the current short-term trend will change, and because of that reason that I just stated, that's why you're able to use that as your take profit. So yeah, guys, I hope this was helpful. When you're trading UJ, also, I only trade it when there's Japanese news or there's U.S. news. And that's the same thing with gold. I only trade gold when there's U.S. news. I do trade gold sometimes during Asian session, because gold, if you want to trade gold and you don't want to do all the craziness with how crazy it moves and stuff, I usually would suggest trading it in Asian session. I like London and New York, but Asian session is a relaxing time to trade gold as well. But yeah, guys, I hope you like this video. If you guys have any questions, you can ask me. And yeah, peace.